Welcome to the Tokenomics DAO podcast, where we explore everything tokenomics related, ranging from deep dives on the tokenomics of the newest protocol to demystifying the nuance of building a successful token ecosystem. Our goal is to bring awareness to the importance of tokenomics and the crucial role it plays in defining the success of a protocol, helping make tokenomics relevant for everyone, builders and investors alike. I'm your host, Flo, joined by my co-hosts, Jason and or Lovis. Welcome to the podcast.
Hello, everyone. On this episode of the Tokenomics podcast, Flo and I talk about the differences that we see between tokens and shares. So it's something that we've been interested about and discussed a lot offline, and we decided to bring the conversation online so that everyone can take part and tell us whether we're right or wrong in what we're thinking. So in the episode, we discussed the regulatory differences between the two, the barrier of entry differences between the two, the role that liquidity plays both for tokens and for shares. And yeah, overall, we see that there are a lot of similarities, but at the end, I think the conclusion is that tokens give us an exciting avenue into how capital can get deployed going forward. So hope you listen in, have fun, and join in the conversation.
We do tokenomics, and I was always wondering, I like to compare it, or I like to think of this comparison. What's the difference between token and shares? And I guess we had a few conversations about it. And yeah, I think today we'd like to explore the nuances of this, the differences between shares and tokens, and how maybe one is better than the other, and what we can maybe learn from shares or from tokens on both sides of the game. So I think it mostly revolves around this idea that, at least in my opinion, often when crypto projects are evaluated, people look at the mechanisms, right? Or at least that's what I do, and a lot of other people in the tokenomic space do. They look at the mechanisms. It looks like, so they're burning so many tokens, they're doing this, they're doing that, they're not doing that. Oh, it's an inflationary token, it's a deflationary token, whatever. And that's how they evaluate how the token will perform. And I always thought like nobody does that with Amazon, right? With the Amazon share, everybody just looks at the business. They look at the cash flow, they look at that, right? But in the token space, at least that's what I see, or that's what I see the majority of people look into. Is it deflationary? Is it inflationary? Rah, right? But nobody cares that Apple creates a lot of new shares, right?
Yeah. But hey, before we go further, do you need to define first what tokens we're talking about now? It's not NFTs, obviously, right? So are there differences for our audience? Are there different tokens we can talk about and then define which ones we're comparing to shares?
Yeah, I'd do a pretty broad comparison. Tokens could be all sorts of cryptocurrencies. We could use Ethereum, which is a layer 1 token, or we could also use a decentralized application token like Uniswap for an exchange, or a DAO token like a social token. But yeah, I don't NFTs. They behave differently, right? Yeah. So I think and shares, right? They're this vehicle of giving you ownership in a corporation, right? So if you choose a specific company type, you launch it, and then you can choose how many of these shares you want to issue, and then you can use it for funding, for representing ownership. And I think tokens, I'll just say tokens, but with that, I guess I mean cryptocurrencies. I mean decentralized application tokens and all that. And I think like they all, behave in a very similar way, right? So if you launch a token, you can decide how many tokens you want to launch. You can use that for funding. You can use that to display ownership or at least governance rights in some way. And yeah, I think that would be like the fundamentals, right? That's what they are, these
Yeah.
things.
Yeah.
But yeah, NFTs are different. So I'd say that let's not go down that way.
Yeah, that one's out of this conversation, right? So
Yeah. Yes.
okay.
Yeah. So it'll be all the fungible tokens, let's say it that way.
So comparison of, would you say this is also something of a DeFi versus TradFi comparison as well?
Oh yeah, definitely. Yeah. Yeah. I
Yeah.
definitely think so. I think like, and I was thinking about that too, right? Where it becomes interesting is when, let's say, Apple or Amazon, they incorporate, or when they have incorporated, then at some point they go public. So they do this initial public offering, this IPO, and then they release shares, and they
Yeah.
define like a price, they define a number of shares that they launch, and then they just get onto the market and are traded, right? And that's how the price kind of this whole pricing mechanisms work. And then once they're launched, the shares, there's like a lot of things you can do with the shares as well, right? So you can, Amazon, I think they recently did a stock split, or Tesla, right? Lots of them do that. So they create more shares and I think it's just optics, right? They just make the price look better per share, or different, not better, but different, right? So they'll issue more shares to get the share price from 3,000 to 300 or 3. So
Or
they can do that.
sometimes the other way around. Sometimes for smaller companies, they don't want to be trading at 1.5 cents. So they consolidate.
Yeah.
And they do 100 to 1 reverse stock split.
Yeah.
Just to get the price to a certain level.
Yeah.
But the market cap stays the same, right?
Yeah, that doesn't change. Exactly. Yeah. And then I guess there's also ways that not a lot of people look at, but I think there's plenty of companies that issue more shares.
Yeah.
Annually, maybe even, right? Like they'll do that consistently. And there's not, it's kind of not like it's the board, I guess, decides, right? The board of directors of the company, or the CEO and his CFO, whoever, they decide if they want to issue more shares to raise more money. And that's done. I guess then there's the program of share buybacks, right? You can do that with shares too. So if you have excess capital and you want to buy back a piece of your corporation, you can buy shares. That's often done as well. Improves your optics as a corporation. So yeah, I think there's all these mechanisms that the corporation has. And if you compare it to tokens have all that too, but tokens also have that programmability, right?
Yeah.
So there's no board of directors deciding, or that could even decide over the issuance rate of Bitcoin, right? It's just going to stay that way.
Yeah. It's baked in the cake.
Yes.
Nothing you do or say will change it, and everybody can judge it based on that merit, right?
Yeah. And so I think there's a lot more emphasis from the crypto community on that, of course. And that might be like an explanation why everybody looks at these kind of things a lot more thoroughly. And maybe it's just me, I don't know. But when I've evaluated a stock or a corporation, I never looked at like how many tokens or how many shares they issued over the years, right? Maybe other people do that, but I don't.
Yeah. It's pretty interesting. Yeah. So I invest quite a bit in the uranium space, right? And it's a very cyclical industry, right? And a lot of these shares, if you chuck on a chart of these shares, and you go back to when, say, before Fukushima happened, was the previous bull market in uranium. you'll see that they'll say, oh, the price of this stock was $10, and now it's I don't know, 10 cents, right?
Yeah.
Because they've gotten killed, right?
Yeah.
But what many people don't realize is that if you looked at the shares being issued between then and now,
Yeah.
right, it's actually, yeah, so the dilution's been crazy, so maybe a better way to look at things would be to say, I don't want to look at the share price's history, I want to look at the market cap history of this share, right?
Yeah.
Because
Or the
then it
earnings
takes
per
away,
share.
yeah, all the earnings per share, because then that takes away all the differences in price due to the denominator being changed, right? And it's interesting that you say that, because hardly anybody thinks of doing that when they're talking about an Amazon or a bigger name company, right? Like, oh, how many shares have been issued in the last
Yeah.
10? Or maybe that's just because we've been hanging out too much with the retail bros, right? Like,
Yeah, maybe institutions do that. I don't know. But if you just compare retail to retail, right? So there's retail stock investors, they just buy Amazon, right? And think it's a cool thing. But if they'd go and buy Ethereum, everybody's like, oh no, but it's inflationary. I can't
right,
buy it. I'm
right.
not gonna, it's an inflationary. But nobody looks at Amazon. And I bet if you looked, you'd find out, or Apple, that they've issued new shares over the years.
Yeah, that's true. That's true. When somebody says whether or not to buy Ethereum, a lot of times the first thing that comes out is, oh, but the supply is not fixed like Bitcoin.
Yeah.
Right.
Yeah.
Yeah.
But Amazon supply is neither, right?
Yeah.
So, and it's
Yeah.
even,
And I remember when we first talked about this a few months ago, we were saying, like, is this something to do with the evolution of sophistication or maturity of the investor class in that security, in that investment class, right? Like, is it because everyone's looking at tokens and DeFi with like brand new eyes, that
yeah.
they're looking at it from a position of curiosity and trying to figure out, hey, how do I not lose my money here? And they're looking at it more as pioneers.
Yeah.
But when people look at shares, it's like, oh yeah, my dad said to buy that stock, right? Yeah, so I will as well.
That's true. Yeah. Or maybe it's like use, right? So I don't know. I've got a MacBook and an iPhone. So, and I see a lot of other people doing it. So that'd be something like a stock you'd buy, right? Because you think like, oh, that's cool. I buy it. I think it's a good product. It works well. So why not buy a share in that company? But like, since only not the absolute nerds, but I think there's lots of people who own Bitcoin, but don't regularly transact with it. Or there's lots of people who have Ethereum and hardly ever send an Ethereum transaction or use it to do something, right?
Yeah. Yeah.
So you don't
Yeah. So
know if the product is actually good. So you have to have
right.
something to fundamentals, or not, maybe not fundamentals, but some metrics to look into.
Yeah. Yeah. So if I wanted to invest in BMW, maybe because I saw their new M2 model come out and I'm like, wow, that thing looks so sick. The reviews are great. Maybe, it kind of, on another level, it shouldn't be an investment related decision, but then it always is,
It
right?
is, yeah.
Sorry, it affects your investment decision. But for cryptos, you never ever really see it in the real world. So
Yeah.
you're forced to use other factors to influence your investment decision.
Yeah. That's true. So yeah, and I guess like there are also like these different metrics, like or that's what, at least what I've seen, right? So with shares, people look at, there's all sorts of metrics, right? You got like the earnings per share, you got the PE ratio, and even if you just search for a share on Google, they'll show you all these metrics straight away, right? But try to find that out for Ethereum, it's significantly harder, right? To find
Yeah.
out what what kind of I don't know what the revenue of Ethereum is. There's some websites that do it, and I know where to find it, but I think it's a lot harder than finding that out. And that's perhaps because this is just not standardized, right? Because all the corporations that issue shares, they just have to report in a certain way, at least in
Yeah,
America, right?
regulatory.
Per country,
Yeah.
yeah. It's this regulatory thing, yeah. And so, whereas like a DAO or any other app, they don't have to report their revenues or their profits or anything like that. They just issue a token, and then people, yeah, buy into the hype or evaluate the community. But not a lot of people look at that stuff, I think.
Yeah. So what do they look at from like for you, Flo, when you look to invest, what are some of the things you look at? For
Yeah, it's a good
tokens?
question, right? Like I'd probably start with the market cap and the fully diluted market cap.
Like a
Right.
ratio comparison of the two?
Yeah, yeah. Because that's something you can't really with stocks. It'll be really hard to do that, to find out, because you don't know.
Yeah, there's no
It's not
limit. There's no
programmed.
limit.
Yeah, like
And
yeah, pretty much with every corporation, there's no limit. So it's like
yeah.
Ethereum, but there's lots of other protocols that have a max supply, right? So they have like a target. So say, okay, the maximum amount of tokens that we ever issue is going to be 100 million. And then I'll look at how many tokens have been issued so far. And if that's only 50 million, I know that during a period of
You're gonna get
time,
diluted in
yeah,
half at some
yeah,
point, right?
yeah, exactly. And that, like, either if there's no additional demand, the price should go down half,
Yeah.
or there's additional demand, but there has to be a lot, right? There has to be like all that demand coming into the market to soak up this 50% dilution, right? That comes onto the market.
Yeah. Okay. So I guess if that's the first thing you mentioned, then it is a factor of inflationary or deflationary. You're looking at it through that lens, right?
Yeah. 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 And that's it, right? Like, and then I I always then also look at what the product is, but I don't
Mm-hmm.
know that so many people do that. Maybe it's just this like wild hype retail crowd that doesn't care about that. They just buy Luna because they heard it somewhere, and they've seen that it's gone up 200%. Maybe that's all, right?
Yeah.
But nobody
Yeah.
looks at, or I think not a lot of people look at maybe like the earnings per share, right? So you could find that out for a protocol. I think you have to do a little bit of digging because it's not as easy as it is for Google, but you can probably go and find out for Uniswap how much they accumulate in their treasury in terms of yeah, revenue. You might not know
Mm-hmm.
all the expenses that they have, but a lot of that stuff would also be on chain because you can see their wallet for a treasury. So somebody who wants to go in there, he can probably find out, right, how many tokens they have and what their earnings are, and then do the math themselves to find out what the EPS is. And there's also this nice website, it's called, I think, Token Terminal, and they have these figures, right? They show sort of like, I don't know how accurate it is, but they show some version of earnings per token.
Okay. And what happens after that? Say I gave you 3 different tokens to look at, and all 3 were 90% fully diluted, right? So roughly they're pretty almost at the end of their minting schedule. Any other? I'm just wondering, like, how would you then investigate further, right? And if there are parallels to how one would buy equities.
Yeah, I mean, like if I think about equities or shares, I definitely look at the cash flow, right? So look maybe into that as well, because that's always a good indicator if it's a healthy business, right? If there's if there's money coming into it and they're using it. So you could look up the same for that. So yeah.
And say, in tokens, would you be caring much about who was behind the token, like the person or the team? Because I think in shares that's a big deal. Like people go, oh, like you can't think about Tesla without thinking about Musk. You can't think about Amazon without Bezos, you know?
Yeah. Maybe, but I think like for Amazon, that's more like in the beginning, maybe it was so, but now I don't think it is anymore, right? Because the company has proven over the years that it can produce cash flow, profits, whatever, and like has built a good business, right? There's demand for it. There's need for the business itself. So, and I think that's really something that for tokens, people who invest into tokens don't really look at that much. They don't really look into what is that business actually doing, like this app, and how does it function. And there's like so many crazy or interesting examples of that, where like there'll be like decentralized exchanges, and they've issued tokens, and a lot of these tokens went into their treasuries, but they don't take any of the profits that they make from trading and put them into their treasury. They just distribute them to the liquidity providers, and none goes to their treasury. So it's like this, it's such a weird business model because they don't make any money. All the money is from launching the token and then having their own token in their treasury. And the only reason it has value because people are not selling it, right? But there's no, they maybe have some diversification, but by now, but there's like so many like examples where that's the case, where there's this token out there that has like large market caps, and then you look at it and you see like, so none of this revenue that happens on their exchange actually goes to their treasury. And you think like in what business would that be valued, right? So like if you had like let's say you have like a business that has certain characteristics, you have like a protocol or a project that has certain characteristics. If you'd invest in them, like I think for the classical business, you'd look into that stuff. But with the token, I think like a lot of times people don't. You just don't look into that.
And why do you think that is? Is that just animal spirits? Like, damn, number go up, so I'm gonna buy it. That's it.
Yeah, maybe it's that. Maybe it's because the information is really hard to get by, like to really find out about, right?
Yeah. This is crazy, right?
It's just, yeah.
Can you imagine someone saying, "Oh yeah, I bought that share. I bought a large chunk of that stock. But yeah, I didn't find out anything about it because information was hard to come by."
Yeah, exactly.
Well, I bought some anyway.
I mean, there's certainly a lot of people that would do that, right? I mean, don't fool yourself here. There's still like the Robin Hood crowd or whatever, right? They hear something out there and they just go and buy it. They'll be like, oh, it sounds good. Not looking at the fundamentals. So I really hope that that's something that will develop over time, that people look more into that kind of stuff. Like what's actually behind it. There's certainly some aspect of like hype in it. And that's the same with shares, right? So if you look at Tesla and you look at it from a pure fundamentals perspective, wouldn't be that great of a company, would it? Right? Because it
like the amount of market cap per vehicle produced, etc. It's not, compared to all the other, value wise, it's not as valuable as all the other car companies. Number go up, so buy.
Yeah. And I guess then you also have to somehow distinguish between growth and value, right? I think we talked about that once, where we're like, Are there any value tokens, or
Yeah.
are they all growth tokens? And
Yeah,
so like
like if something paying me a 6% dividend, 10% dividend, I don't expect its market share to increase. I don't expect its user base to increase. I just want it to keep making that same amount of money every year and give me that same nice sweet dividend every year, right?
yeah.
Don't think I
So
know any, but maybe they will become more of the norm at some point. I mean, it's this classic thing of when liquidity is high, people look to buy growth. When liquidity stagnates or goes down, people look to buy value. So
yeah.
since 2008, when the crypto space first exploded onto the scene, um, we've always been in a very high and ever-growing liquidity environment, right? So, like you mentioned when we spoke,
Yeah.
yeah, it's a very growth stock type feel for the whole crypto space because it exists in this ever growing liquidity environment.
Yeah, true. And that then just applies to crypto. So, but now that we're in a bear market and liquidity's not there anymore, where does the money go in crypto?
Yeah.
Since it's all growth,
Or
I feel, right? Maybe there's like Ethereum when it migrates to proof of stake, that could be a little bit like a dividend paying company.
mhm.
But yeah, I guess like since it doesn't really have that many real world applications, so like for your day-to-day life, you wouldn't yet really need it.
Yeah.
I guess, yeah, it's just like all growth.
Yeah. So I guess from a big pictures perspective, if we stepped back, we would say, okay, tokens or shares, both of them, although they have differences in how they're set up and the regulatory environment around them, uh, the the investing side of things, right? The people that are buying them, they're the same, right? A investor can choose to buy between a share or a token, um, or both. So, in essence, while the creation side might be different, the actual investing side and how it should attract capital, it's kind of playing the same game, right? It's trying to
Mhm.
catch the same fish, right? So one might assume that given a long enough timeline, the decision making behind which one to buy will sort of level out and become I can't find the right word here, like it becomes standardized, right? Like there would be certain boxes an investment class would need to tick before uh, an investor would put capital into it, right?
What will these boxes be?
Yeah, like whether it's growth or value,
Mhm.
or which one has a higher chance. If say I was in a gambling mode or a very greedy mode, I would go, okay, which one gives me the best opportunity to have huge capital gains, and is that Tesla, or is that Ethereum, or is that Doge, right?
Yeah.
So as a speculator, which one gives me the biggest chance to 10x, right? With the lowest chance of crashing to zero, you know.
Yeah.
But then say we're having this conversation again in 2050, you'd expect that there would have been some periods of strong deflationary, low liquidity winds, right? Like maybe imagine the Federal Reserve went and brought interest rates up to 19% or whatever, right? Like historically, for a period of 10 years. Okay, how would the crypto market look like then? You know,
Yeah.
because do you really want to buy Bitcoin? Yeah, the supply is not going to go up, but I could buy a token called the US dollar and put it in a bank account and get 19%
Yeah.
interest
Exactly.
on it.
Every year. Yeah.
So then the interesting thing at that point in time would be, okay, then the only difference between a share and token is not how it's perceived, but how it was created. And then probably then that's where what you spoke about earlier in the conversation comes into play, right? Like with shares, the board of directors can change the direction at any time, but maybe with tokens, you then have that ability to look at how the token's set up and then extrapolate that into the future. And I think that's when the real differences will really come into being, right? Because yeah, at the moment, I think so far we've only gotten to see the more speculative side of the coin.
Yeah, yeah. Yeah, true. It would kind of also like make it easier to invest in, right? Because it's more predictable to a degree.
Yeah, exactly. Because then you've got that you're able to layer things on in a neater way, right? You see that business, you see the business case or the business model, which is the same, right? Whether it's represented by shares or represented by a token, it's independent of that because you can then go and value something based on its business model. And then afterwards, you get to see, okay, do shares give me a better proxy of, say, ownership or value appreciation, or do tokens do that? Um, yeah. So
Is there any difference in that? In like
I think from what you like, what you
ownership
mentioned
or
is true. What you mentioned is true. Like, okay, you know, with shares, uh, maybe the maybe the Federal Reserve will change something, right? That underlying layer that backs this whole stock market, right? If Jerome Powell comes out at the end of the month and says interest rates are going to -5 or interest rates are going to +20, that changes everything, right? So one guy has the ability to make a huge difference, right? But maybe with tokens that will be less so, but
no,
I don't
like,
know.
it's still
It was
fiat that's impacting a lot of what's going on, right?
yeah.
In
But
both of these, right?
yeah, I guess today, yes. But what if in years to come, you know, if the shadow economy of cryptos, right, becomes large enough where, you know, the liquidity is based on how much Bitcoin's worth, and right, and if that stays relatively stable, and maybe if the size of Bitcoin becomes big enough that uh, you know, the liquidity from the fiat side doesn't affect it as much anymore, then maybe then we'll see some divergence. But yeah,
Yeah.
right now definitely Bitcoin trades like a high beta Nasdaq, right?
Yeah.
And if that's the
Exactly.
liquidity of the whole web 3 or token space, then
Not
then
good.
the token space trades like a beta of the beta, right?
Yeah. Well, I mean, like, yeah, to some, yeah, yeah. I guess like the more niche you get, the more that's the case.
Yeah. Unless at some point, right, some project comes out and says, yeah, I'm spitting cash, right, and I'm giving it out to my token holders, and you get like a, you know, 100% dividend every year, right? Like just imagine that, right? If there's this
Yeah.
crazy growth, right? It's growing so fast and it's sharing that with its token holders. I think that would be another aha moment for
Yeah.
the space.
Yeah. 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 I mean, there are these protocols out there, right? That kind of have models like that. You know, like Balancer. They're this decentralized exchange, so you can just like swap tokens, like a market maker. And unlike a real market maker with like an order book, they they don't have any of that, right? It's just all a smart contract. So they don't need any people or expensive stuff to do anything there. It's just pretty much all runs on autopilot. And what they do, they they take a cut off of these trades, right? So someone who needs 2 trades, they pay a fee to them. And that fee then is used to pay for expenses and all that kind of stuff. But they distribute I think it's like 75% of the revenue that they make to their token holders. And that's
And
pretty cool, right?
how does that work? So they know the token holder's wallet address, and then they give them a stable coin, or they give them, how does it work?
Or like you have to lock up tokens. So this is it's like, and that's like where I think tokens are far superior to shares, because of all these mechanisms that you can build in. So they've got this voting escrow system, which means that you it's quite complicated, right? So there's these liquidity pools. That's how their system works, right? So two parties provide, or one party provides liquidity. Liquidity means you provide a token pair, right? So you put some ETH and USDC into a pool. And then one guy who wants to trade ETH for USDC, he gets served out of that pool, right? And so someone to get into this or be eligible for this dividend that they pay, I don't want to call it dividend, but for this revenue share that they pay, they have to put the balancer token, their own token, into such a pool and pair it with another token that will give them another token that you then need to lock up for a period of time. So that's then quite interesting, right? So you are asked to put your own capital into their pools as liquidity. That gives you a token that you then need to lock up. So you give them money. Let's say you put some money into a vault and you get the key, right? So you've got a vault, maybe you have some gold in there, right? You put that gold in there and they give you the key. And then you take that key and you give that to someone, and it's locked up for a period of time. So in a time locked safe. So you put that in there for a year. And that gives you then a token, right? That you can retrieve this key after a year. But this like locking up, it also gives you voting rights on the protocol. So you have certain decision powers over what the protocol does, how the treasury gets distributed. And it also gives you that 75% of revenue share, right? So you can kind of claim that back from there if you have that token. That's kind of how it works.
Okay. And again, so that 75% share, how does it come to you? Like you get more balancer tokens, you get more.
It's like it's USDC or other tokens. So you don't get more of the same, you get like a different currency.
Okay, so it's just that you need to hold that token for a while before you get that payout.
Yeah. I think there's also some regularity. I don't know how often they pay it out or whenever you can claim it, but yeah, there's different ways. I don't know the specifics of it, but I think it is a different token that they pay out. It's not balancer, because that wouldn't be real yield. That wouldn't be like a real dividend, right? That's also something that I think shares can do, right? They can issue more shares and give them out to shareholders.
Yeah.
But if they give them out to all shareholders, it's kind of doesn't make a lot of sense, right?
Yeah. Interesting.
So I think like, yeah, that's a mechanism that you can do. So there are apps out there that I think that's how we got into this tangent, right? So there are apps out there that already pay dividends or something like dividends, right?
Yeah. Because
yeah,
there's certain classes of investors that really do need these dividend yielding shares, right? Like for them, say retirees, for them taking high risk and hoping to like all they want is, okay, I'm 70 years old now. I might live another 10, another 20 years. I need some income and stable income. I don't need my money to 10x. I just need my money not to go to zero, right?
Yeah, exactly.
So there is that need there. There is that need for such investment vehicles, right? And in case we haven't noticed, most of the developed world where most of the capital lies, we're all getting older. So
Yeah.
we don't really want to put our nest egg into Shiba Inu, right?
Why not? Seems like a good idea. It's
I
a
mean, if
cute
you
dog.
did
Yeah.
2 years ago,
Oh,
if you did 2 years ago, you'd be like a 90-year-old driving Lamborghinis.
yeah. Well, only if you took it out
Yeah.
on time. Um, yeah, and I think like, wasn't it you who said that 20 years ago there wasn't even that much growth investing? It
Oh
was like
yeah, I think
a lot
the
more
70s.
focused on, well, maybe not even the 70s, but like before this whole tech hype, maybe like in the 80s, yeah,
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 or even yeah, you're right. Like
or
after
90s still, yeah,
after the dot-com boom in 2000, after that went bust, yeah, for a long time, there was somebody who was talking about it yesterday. Like if you look at the charts of Microsoft and all these darling names, right? Apple, they didn't do that well,
yeah,
2000 to 2008, right? Like 2008, Goldman Sachs was doing very well, or
yeah,
JP Morgan on
yeah, yeah.
housing prices.
So people were more interested in that, I guess.
Yeah, yeah. I mean, you live in Australia, right? You see the housing situation there. Like you don't own a TV, but whenever you walk into a friend's place, anyone that has a TV, it's so much of the programming and so much of what's on everyone's radar is housing in Australia,
Yeah,
isn't it?
yeah. You don't even have to look at the TV. Like everything is.
Yeah.
I think like the whole
Which is
economy is like based on housing and mining, I think.
yeah. And it always strikes me whenever I visit, you'll be, everything's about housing. Even the TV shows, right? People would sit down and watch how housing get like people flip houses. People would actually sit down and watch reality shows on how couples would go buy a place, renovate it, and then flip it. And then
Yeah.
a nice big
They
number
did like
comes on the screen
yeah,
with a ching sound, right?
2x. Yeah.
Yeah.
So it's kind of like, yeah, it's almost like this crypto hype, but with real estate.
Yeah. And then if you look at it from that perspective, you'd go, hey, maybe is that because supply is limited? Or what's the deal here, right? Like everyone's paying ever more and more, and it's not because the utilities increased. Yeah, you can put some Scandinavian furniture in there, but overall it does the same job, right? There's somewhere to hang your clothes, there's somewhere for you to put your head down, and it keeps you warm, it keeps the rain out, right?
Yeah.
And it's nuts because the houses get older, the utility
They
is the
depreciate.
same.
Yeah.
Yeah, but the price tag on them just keeps going up, right?
Yeah. And
Oh,
there's,
I don't know.
they've got really
Recently,
tough immigration policy, right? So it's not like there's like millions of people coming into the country every year wanting to
yeah,
live in these
exactly,
places, right?
exactly. And it was crazy because I think during COVID, I would have thought, okay, things now would be really struggling because nobody's able to travel, come in. Why would you, if you're a foreigner, why would you go there now to buy houses if you don't even know if you'd be able to be let in at some point, right?
Yeah.
But guess what? Liquidity went up, and then housing prices followed, right? And there was this frenzy to get a place, right?
Yeah. 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 Like, yeah, everybody was doing it. Yeah. Like when I walk around here in DUI, it's like every day, or not every day, but when you see these real estate signs, it's like quite often you see and they like brag about it, right? Highest
Oh,
ever
yeah.
sold in this street, or highest ever sold in the suburb, whatever. It's
Yes.
quite quite interesting.
Yeah, and it's been that way for a long time now. But then, like I said, low interest rates, high liquidity environments, low real rates. high liquidity environments have been the norm for such a long time now. Like the ECB just went and raised interest rates by 0.5% from like a negative number to, I think now they're at 0, right? And everybody's like, oh my God, is that gonna help inflation? It's like, dude, it's 0%.
Love it.
And we're having a beer the other night, right, in Leipzig here, and people were saying, "Oh, the prices of everything's doubled now, la la la." And then I just took out my phone and I just showed them like a chart of the ECB's balance sheet from 2008 till now, right?
Yeah.
And it's something like 16x, like 500 billion to 8.5 trillion or something like that, if my memory serves me right. And I was like, "Hey guys, have you ever played Monopoly?" Yeah, we have. It's like, hey, do you realize that doesn't matter what you do, but come turn number 20, everybody's bidding for housing on that board, and nobody's looking at the sticker price. Like everybody's just, nah, I'll give you double, I'll give you triple what the sticker price is, right? No one cares anymore about the sticker price. But why is that? Like, right? Like everyone's the same. Every player's the same. The rules didn't change. The only thing that changed was there's more money now in the system sloshing around. That's it. And so then suddenly Mayfair with 4 hotels becomes a meme token or a growth stock, right?
Yeah. I think that's what they even say on the instructions of Monopoly. If you ever run out of money, just don't worry, just take a piece of paper and use that as money.
Yeah, the bank never goes bankrupt.
Yeah, exactly. The bank never runs out of money. That's that.
So it's super reductionist, right? Like it's almost vulgar how you can just go like, hey, whatever. Of course, the price of a beer, a kebab, and your apartment is going to go up because look at this graph.
Yeah.
And it's almost when you know everybody's listening to the news and it's like, oh, inflation because there's war, oh, because Putin's a bad guy, you know, the Putin price hike and la 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 la, oh, you know, and there's so much jargon, right? There's so much stuff that's being thrown out when actually you can just say, hey guys, how much money is in the system?
Yeah. So that, like, back to our last podcast, there's just a source, no sink.
Yeah. Yeah, exactly. It's just sources, no sinks.
Yeah.
So yeah, I wonder how crypto is gonna do. Like,
I don't think it would be very different. It would just be the same.
Yeah, but what I mean is, you know, during those periods, right? Like during the 70s when or when interest rates kept going up, right? Or in times past when there's been a high interest rate environment, like people still made money, right? In investing, I mean. And it's just that the kind of investments they were looking at changed. They went from growth stocks to value stocks. They went from capital appreciation to not, what was the saying? Not return on capital, but return of capital.
Yeah.
You know, during the Great Depression, you'd be happy just to have the same, right? Because first, you're not on the street. When you have a job, you didn't need to get a pay raise. You know, everyone else around you was losing their shirt, right? So you just having any sort of income was like, wow, so valuable during that time. Prices dropped, your salary stayed the same, you know, your buying power drastically increased. So I'm just wondering, like tokens, right? In that environment, what kind of tokens would come to the fore, or how would the whole space pivot, fork, whatever terminology you want to use?
Yeah, so like, I think it's just very similar to shares. It would be the businesses that really maybe have that return of cash, or however you called it, right?
Yeah,
The ones
like
that,
the balances.
yeah, that pay something back, rather than the more speculative ones where, I mean, even these could go well. I don't know. You never know, right? It's this, you always have these elements where it's sort of like it's a call option, right? So maybe they don't have any revenue, but they've got really strong plans on like getting solid revenue and profits in the next
Yeah.
year, and you can already
Yeah.
buy the token, right?
Yeah.
So if
And
you're
if
in
they
forward
show
booking,
you,
yeah,
and if they show you the design and tell you that, hey, no matter what happens, we're going to split that revenue with you, and this is how we're going to do it.
yeah,
That might give so much more security to the person, or confidence to the person investing, right? Versus a company that promises to do so and maybe doesn't.
yeah, yeah. So one thing that's kind of also in this space that I wanted to talk about is ownership and what that really means. Like a lot of people describe owning a share as owning a piece of the company. And I've always like been thinking about this, like what does that actually mean? Because you can't really go there and say like, okay, I got my Amazon share here, I'd like to turn it in, right? And they'll give you like a piece of warehouse or something. Like, and that, like, yeah, how that mechanism works and how that compares to the token world. Not really sure if I have a good answer, right? But yeah.
Yeah, we were trying to wrap our head around that, right, when we spoke
How do you
about it.
exercise that ownership? Maybe it's just a theoretical construct and everybody says like, yeah, okay, that's just how it is. And that's why these things have value, the shares, right? Because regulation says, well, you're entitled, or this is a share of ownership. Don't really know. But would you think that's similar between shares and tokens? I mean, like with tokens, you don't have any of that regulation.
Yeah, there's a lot of stuff spinning in my head and I can't really make sense of it. But yeah, if Amazon came out tomorrow and said, hey, we've decided that we will never pay out dividends going forward, or at least till 2030, right? I don't think it would do that much to the share price. Trying to do nothing. Probably the share price would go up.
Yeah.
And yeah, so what is it that people are buying Amazon for? You mentioned it right, that it's just this, you know that the company is real, and you know that you might be able to sell it, most probably by what's been happening in the past. It's tracked inflation, it's done even better than inflation. So going forward, I should be able to sell this thing and make some money and beat inflation. And that's it.
Yeah. But isn't that like, wouldn't that like in that case always be like this greater fool? Well, it's not really greater fool. It's like, well, somebody else has a different opinion than you, right? So the time you're selling, they're buying because they think they're going to be able to sell it for even more to someone else later on, right?
Yeah. And I guess it's coming back to that liquidity thing again, right? Like in periods of high or low interest rates, low real interest rates, people want to own anything that isn't dollars or euros, because everything goes up when there's more dollars in the system.
When there's more dollars coming in,
Yeah. And maybe because that's the underlying mood of the herd, right? Everybody's thinking, shit, where can I put my money so that it at least holds its value?
Yeah.
Then that basically switches on that speculative fever. And then since you're already in that mood, then why buy Amazon? Why not buy Doge? I mean, come on.
Yeah.
Since you're wanting to make money on like a transaction, and you don't really care that much about, like how many people in Amazon know or not in Amazon, how many people that own Amazon or Apple or Tesla can tell you about how much money, earnings per share that company has, right? Like the Tesla guys, no way, because for most of the time, it wasn't even making that much, right? Or how much of it was not from, say, trading of subsidies or trading of, whatever government related.
Yeah. But like, why would you care? Right? Because
Yeah,
if the only
because
thing is you're going to sell it to someone who is going to buy it for more, then it's all about this. And that's what stocks are, right? Like forward looking. So it's all about this, like, what's going to happen in the future. And that's what all the Kathy Woods in the world are like. That's why they're into Tesla, right? Because they say, oh, they're going to like they're the only company that's going to bring out these like self-driving cars and AI and whatnot, battery technology, all these things. That's why they're that.
yeah.
And I think like tokens would be like just the same in a lot of cases.
Yeah. So at the end of the day, tokens give you that proxy of, or gives you ownership, just like how shares do. And it's a proxy to how the company is doing. But that being said, you can have a dividend paying company, or a company that promises you ever greater market share, right? And
Yeah.
I guess as underlying liquidity conditions change, what the market wants changes as well. And then that's it.
Yeah.
I mean, who knows? Maybe when when interest rates in Australia go to 20% again,
When is it
I'm
not?
not saying that will happen, but it did happen. Like my dad, for example, when he bought a house in Brisbane, I think interest rates were like 19.5% or something. So if you were to buy a house, you basically paid cash, right?
Yeah.
And but because interest rates are 19%, it means no one can transact based on um, you can't take loan, you can't take on a mortgage to buy the house because the mortgage is too expensive. So everyone
Yeah.
ends up buying it just in cash, and therefore, the prices drop, right?
Yeah.
And I think, and then at that time, people will not be talking about, oh, what's the price of a house? It'd be like, hey, if you're a real estate investor during those periods, you'd be talking about, oh, the yield I have on that property is this because I get this much rent. Yeah. Nobody talks about rent nowadays, right? Because why? I mean, my cousin is a concreter, and he was saying that he's seen blocks and blocks and blocks, like hundreds of homes being left empty because they were bought by investors and they don't want people to live in it because the yield's so minimal, right? They'd rather not
Just
have
hold it.
anyone live in it so that it can transact easier, right?
Yeah. So you don't have to get the people out.
Yeah, imagine if I said, hey, do you want to buy Amazon that pays you a dividend? Or do you want to buy Amazon that doesn't pay you a dividend, but when you want to sell it, you can sell it instantly?
Yeah.
The one that pays a dividend, you have to wait 6 months. After you say you want to sell it, you have to wait 6 months before you can.
Yeah. It's like the same thing with the balancer token, right? It's this VE model.
Yeah.
Like, so when you have someone living in it, you're kind of like locked up for some time.
Yeah.
That's interesting.
So,
Like, that's an interesting avenue of speculation.
yeah,
They
yeah.
just build these houses, leave them empty, and they just speculate on them.
Yeah, exactly. And why, if I'm buying it to speculate, why would I want this like 1% yield on it when I'm hoping to get 10% a year compounded on my speculation? Because that 1% yield would affect me exiting the trade.
Yeah. Yeah.
It's absurd and it sounds vulgar, but if you really break it down into these terms, right, then you sort of understand it. The incentives aren't there. Basically, incentives aren't aligned. The housing incentives, if you give people like really, really low interest rates, then housing becomes, instead of being a utility that you want to provide like a good for the people, it becomes just another speculative instrument.
Yeah. That's weird. Yeah. I guess, yeah, I mean, lots of analogies, right, in the crypto space or in the token space to that.
What I love
Same
about the
thing.
crypto token space is that it's getting everyone to look at something with a new set of eyes, only for them to then realize it's so analogous to so many things in the traditional world,
Yeah.
right?
Yeah.
And then because of that, they then migrate their new eyes back to the traditional world and they see things differently, right?
Yeah.
Like I think crypto, for all the things that people say about it, the cons of the crypto space, right? I think the biggest pro is probably giving a whole generation of humans like a empirical education in what financial markets are, right?
Yeah.
And what capital is and
Nobody knew what
why.
fiat even meant, right? Like 10 years ago.
Exactly. If you went to a party 10 years ago and said, "Oh, I'm not a fan of fiat currency," they'd be like, "What fiat? What fiat? Isn't that the brand of
It's a
car?"
car, yeah. Yeah, true.
Yeah. So just I think just the education on what money is, right? Asking that question alone is probably already worth all the losses that everyone's taken, right? And all the
Yeah.
pain.
Well, yeah, it's not only this education, but it's also this experimentation, right? So I think I've heard that from someone that the cool thing about crypto is really that you can experiment, you can try out this stuff and you can do it a lot quicker than in the real world. So you can launch a DAO and you can come up with this like new governance, org structures, I don't know what. And you might be replicating whatever democracy the United States has or Europe has. And you might figure out that that's a cool system. But the great thing is that you can do it a lot faster. Like if you think about when the last time was that the German or the American or the Australian democratic system has been like innovated, probably quite some time ago, right? And so
Yeah.
now with this sort of like people randomly assembling on the internet, buying these tokens and getting together in something like DAOs, they're like innovating on all sorts of stuff, right? They're trying out this, they're trying out that, and stuff will fail, but it's just happening a lot faster. It always reminds me of this like Elon Musk when he's building his rockets there, right? There's this approach that Jeff Bezos takes where they like research everything up front and then only when they like really sure that it's going to work, they're going to try. And what I've heard that these guys building these SpaceX rockets, they just try out more stuff, right? They just like iterate a lot faster and sometimes
Yeah.
have stuff blow up.
Yeah. So they're racing to fail and then learn from that failure, right?
Yeah.
Yeah. Another thing I really like about the crypto space is that no matter what you want to say about it, the money that flows into that thing, right, is not public in a way. It's not directly public money. It's capital that if it's lost by people that quote unquote can afford to lose it, right? Compare, and of course this is a relative scale, okay? Of course nobody's happy to lose their money, right?
Yeah.
But the point is, imagine if institutions like in the old world, the traditional world, were to try and innovate. What do? The government spends money, right? The government says, "Oh, we're going to put money behind solar. We're going to put money in electric cars. We're going to do this. We're going to do that." And if it works, great, right? But if it doesn't work, who loses? It's tax money, right? And as a you're basically taking people's money by decree at the threat of violence, right? And then using that money to innovate with not so much say given to the person that produced that capital in the first place. So you're putting capital at risk without the producer of that capital having a say in how that risk is taken. Whereas crypto's different, right?
Maybe it's about transparency, right? Because of course, people in like normal democracies, they would have a say. They could vote people out of office, but it's just so intransparent in like where stuff goes, where money goes, and how it's redistributed.
Yeah, but then you're right. Theoretically, you're right, but in practical terms, that voting election cycle is counted in years, right?
Yeah.
And
Yeah.
even then, when you change that new person coming in, you don't know that new politician coming in isn't run by a smart contract. He doesn't
Yeah.
say, oh, yeah, I will definitely stop doing this or I'll definitely start doing that, right? He comes in. I mean,
Promises.
say what you
doesn't
yes,
else,
say what you want, right? Like the Green Party got elected into office in Germany, and now Germany is burning coal again, right? You can say
Making
whatever
everything
you
worse.
want.
Yeah.
You can say whatever you want. Like, okay, maybe coal's good. I don't know, but it's definitely not the platform that they came, that they promised, right? When they came in.
Reducing emissions.
And
Yeah.
yeah, so I think with cryptos, it allows that iteration a lot quicker. Like, okay, try this model. Money comes in based on how much attention and trust that model could elicit. And if it works, people get paid handsomely. If it doesn't, people lose that money, but then they try again.
Yeah.
Right.
Yeah. And that's also probably because of the fact that it's not regulated that much.
Yeah. You look
So,
at Sri Lanka,
yeah.
for example, it's the total opposite if you want to draw that scale, right? Like the government basically went all in on something without the participants being able to afford to lose, right?
Yeah.
And they had no say,
Yeah.
right? You could go all in on Bitcoin, and that's good if you decide to, and if you make it, it's great. If you don't, you go live in your mom's basement, right? But you've already made that decision before you went all in. But governments can't really do it that way.
Well, because it's also, I mean, that's also, you have to distinguish, I think, between an individual and a collective.
Yeah. Yeah, exactly. And crypto allows the collective to make decisions on a very individual basis, right? Like millions and millions or billions of individual decisions, right? And then that swarm or that hive mind, then it brings the whole industry in a certain direction, right?
Yeah.
It's not the same.
Yeah.
This is going, a bit on a tangent, right? But I don't know if I ever told you. Yeah, we should call this a tokenomics tangent podcast. But my teacher, my Chinese teacher in primary schools, this really old school guy, right? Super traditional in Singapore. So I was 6 years old, and this guy is like waxing lyrical nonstop, right? About, do you know why the West is ahead of China? Like, do you know why? And we're all like these 6-year-old kids, right? Just like, tell me stories, tell me what. Yeah. But he kept drilling it into us, right? He was like, hey, do you know like 200, 300 years ago, China was like at the top, right? It had the best technology. It was able to control like the biggest market space, right? It was like 50% of GDP, la, 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 la. He said, but the Europeans figured out quicker about democracy and because of democracy, they were able to make decisions in a more, let's say, with better insights, right? Because everyone was involved, and it wasn't just one person in an ivory tower. He said, so that's one factor. But another factor that nobody talks about is that they were able to get capital from the common man to then go and build these warships or whatever, these raiding parties, right? Whatever you want to call the East India Trading Company, right? Their version of trading was, we've got guns, so give us what you have, and then we'll bring that home, and then we'll sell it at a huge profit, right? And people could invest in these ships, right? And they would then the ships would then go out into the great unknown, and whatever bounty they come back with, you get a share of that. And so it basically liquefied all this dormant capital and allowed this capital to become productive in a way, right? Or speculative, or whatever you want to call it, right? But because there was a chance that, Captain Cook was going to go to the other side of the world and come back with some treasures, shit, we will use this money to think of how we can make a ship sail faster, further, whatever, right?
Yeah.
And so everything just started to work at hyper speed versus this old creaking, slow
Centrally
moving
planned. Yeah.
glacial system, you know.
Yeah.
And I think in many ways crypto is kind of, you know, leveraging off that dynamic again, right? Because there's no rules.
Yeah.
Everyone can lose everything they put in, but there's promises of crazy rewards, right?
Yeah.
No,
Yeah. Iterate really quickly, right? There's lots of capital around
yeah,
that people are willing to put in.
yeah. So tokens versus shares, right? That's one part that I think tokens have a huge advantage over, right? If you are a millennial and you're growing up and you start earning your money and you see the system around you and you've lost faith in that system, like tokens give you that avenue to migrate to another ecosystem. Yeah, it's
Or at
still
least like
affected
put
by the old
something.
one.
Yeah.
You know.
Yeah, put something into, you're able to invest or to put money into something that like iterates, like these, East India trading companies or whatever. You can put something to that, and they'll go out and try out stuff and maybe fail, but some of them might come back with riches full of gold because they figure out something really cool.
Yeah.
It does that a lot faster.
Yeah, and in that sense, it's super different with shares, right? Like
It's regulated.
I mean, yeah, and I've been investing for quite a while, and you often hit these roadblocks, right? Oh, you can't do this unless you're an accredited investor. It's like, whoa, accredited investor, what does that mean, right? Accreditation. Wow, do I have to go to university to become an accredited investor? No, you actually need to have this amount of money before you're allowed to play.
Yeah, exactly.
Right. So you mean, to get a good deal, I need to be rich first? It's like, damn,
It's true. Yeah. So kind of,
and that's something that tokens probably allow, more easier access. It's more accessible.
Yeah, because it's early. I mean, it'll probably change after some time. I don't know, or get infiltrated. Maybe like some degree of regulation is good, but so far or still, it is this like Wild West, right? Where anything goes.
And because it is that Wild West, you're allowed. You just said something interesting, like, maybe it will be regulated, or maybe it should be, or but if it's a totally Wild West empirical system, then people just see, okay, what worked, and we'll just
that's it.
we'll just imitate whatever works, right?
Yeah. And I mean, that's also what's really cool with all these smart contracts. So somebody comes out with this new model and says like, oh, this voting escrow, it's a pretty cool concept. Now everybody's doing it, right? Now everybody's going and just copying this thing and trying the same out for them. And then there's going to be, in a couple of months' time, there'll be someone who created a version 2 of that that's even better, right? And then they'll go on with that. And with shares, that you can't. There's just this regulated system that says, okay, you got to do an IPO, and an IPO costs you like a ton of money to do, and you need all these like legal experts, and you got to register and whatnot. And it takes you a lot of time to innovate and get up to speed with that. But here, they just go do stuff, try out stuff. A lot of them fail, but in a lot of cases, there's so much innovation happening. And not just on like the technology on how to do blockchains, but like, I mean, like all these DAOs, I get a feeling there's so many of them reinventing the way we work, like this whole future of work topic that we talked about, reinventing how to govern and what works and what not. Like that's what's really cool. That's what's happening, right? There's thousands of DAOs and thousands of people thinking through what actually should be done. And with a democracy, you can't really try new stuff. Or even within corporations, right? There's probably very specific rules on who's on the board and who has what rights to say what and how things work, right? There's not really a lot of space for innovation.
Yeah.
So yeah.
Yeah.
I think
Access to, let's say capital is what, in a capitalistic system, capital is what allows things to get done, right? So say now we have the Tokenomics DAO and we want to IPO this thing to get capital. It's like, how's that ever going to happen, right?
Yeah.
Like, okay, I have to jump through this hoop, then I have to get that much, and then I have to raise this much, you know, the la 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 la.
Yeah.
And then on the other hand, we could go, hey, let's tokenize ourselves and let's go, right?
Yeah. Yeah.
And that's it. And then we have that capital.
Yeah.
Maybe, you know, it's not going to be as much as if we were on the New York Stock Exchange. But the point is that barrier of entry is so much lower for us to now continue to experiment and iterate, right?
Yeah. Yeah. Exactly. We could just go and try stuff. It won't take us 4 years to do so. You can pretty much just spin it up and go for it.
And the admin load, imagine the admin load we'd have to take on to become like a publicly listed company, right?
Yeah. Yeah. I mean, that's why everybody says this is so expensive to do, right? The admin load of spinning up a smart contract to launch a token is quite low.
Yeah.
Cool. Yeah.
So should we try to wrap up?
Yeah, I think this, I like the ending. I think we kind of, on the tangent, going on a tangent podcast, we found back to where we wanted to go or where we started. So it's good.
Is that even mathematically possible that a tangent can bring us back? We just did the impossible, man.
Yeah, again. Cool. So I don't know how to do these plugs.
We need Lovis.
Lovis, it's time for you to go back to Germany. So we'll have time zone overlap. So yeah, anyway, I'll try.
Go for it.
Yeah. If you like this, of course, we'd like you to subscribe and follow. We've also are discussing a lot of things like that, or like these things on our Discord. You can reach out to us on Twitter. And we'd love for you to come by, say hi, maybe join our community and join in on these discussions, right? And if there's anyone you'd like to see on the podcast, we're also really open for that kind of feedback. And hope you listen in next time.
Thanks for listening.
This podcast was not financial or tax advice. This channel is strictly educational and is not investment advice or a solicitation to buy or sell any assets or to make any financial decisions. This video is not tax advice. Talk to your accountant, do your own research. None of this is legal advice. This podcast is strictly educational. Talk to your lawyer.